Bloomberg Audio Studios.
Podcasts, radio, news.
What's the coolest thing you've ever insured?
I remember a guy turning up once and a blind man was trying to break the land speed record in a car. and you're thinking, right. And he was doing it on Maplin Sands. So actually, it's the biggest sand stretch you could imagine and about as safe and as managed. So actually, the risk is awesome.
Right.
But it sounds nuts. You've got a blind man trying to break the land speed record. And then when you hear the story, you're thinking, this is absolutely fine.
That's awesome.
So,
you insured it?
Insured it. He needed insurance for roughly an hour and was prepared, this is back in the day, prepared to pay 250 quid.
Welcome to In the City, a podcast from Bloomberg about the stories important to the City of London. I'm Francine Lacqua. Now, you just heard a bit of our exchange with this week's guest, John Neal. My co-hosts, David Merritt, Allegra Stratton and I sat down with John a few weeks ago. He's the Chief Executive Officer of commercial insurance market, Lloyd's of London. Now, the marketplace is basically made up of more than 50 companies who underwrite a large range of risks, from accidents to war to climate change. They also saw over £50 billion worth of premiums pass through last year. He's been in the business for more than 40 years, giving him a front row seat to the changing risks facing global business. So we spoke to him about those changing risks, how Lloyd's has continued to adapt, and what challenges he sees next.
Welcome to the City of London.
The City of London.
The next station is Bank. Please mind the gap between the train and the platform.
The financial heart of the country.
The City.
The City.
Welcome to In the City.
Stand clear of the doors, please.
Thank you so much for joining us on the show, John.
That's great to be with you.
Our Dave Merritt was dreaming of working at Lloyd's of London in insurance growing up.
Well, my dad was a broker. He was a shipping broker at Lloyd's. So I think it was if you asked 5-year-old me what he wanted to be when he grew up, it was basically your job, John. So.
Wow. I was the opposite. I did languages all the way through college and then stupidly thought I'd trained to be an accountant, which clearly I wasn't going to be any good at, which I wasn't, and then ended up in insurance thinking, what am I doing here? And I've been there ever since.
Well, it was always my dream.
We're making your dream happen.
This is it, right? Exactly. This is as close as I've ever got.
I mean, it's a very complicated job. How much do you love your job?
You've got to be right and ready to do the job. And I thought I was right and ready. So I've underwritten. So I've been an underwriter at Lloyd's. I've run insurance companies. So I just felt I was ready. And you're at a stage in your life where you can cope. Because you're right, you've got 50 insurance companies and 400 broking firms, all of whom have got at least that many number of views on how you should do things. So you've got to feel at a point where you can be valued, but you can give some clarity as to the direction you want to give or get.
It's a unique place, Lloyd,
yes.
Isn't it? There's nowhere like it in the world. This kind of confluence of companies and underwriters and brokers. Some people have said over the years that it's outdated, that concept, but it seems to be flourishing. Like, what's the sort of health check of that unique institution from where you're sitting?
Insurance is slightly odd, isn't it? Because you get people competing tooth and nail with each other for the business they want to win. But then the business is so complex and of such a scale, you've got to participate to solve the problem. So actually somewhere where people can genuinely gather to create the solutions and co-participate has a unique value proposition. You've got 50 insurance companies, most of whom you'd recognise are represented at Lloyd's, and you've got 400 broking firms. So I think we see $400 billion of flow. And we've got 63,000 insurance professionals within 2 kilometres of our front door. So you can talk about, the licenses and the global reach and all sorts of stuff that people talk about, but it's flow and talent are the two things that are utterly unique.
This is what I've always found so fascinating about it. It's about that building, that confluence of experience, of talent, and the pedigree or the history, hundreds of years built up. And the fact that that is still preeminent in an age when so much stuff has gone electronic, so much stuff is done transactionally across different continents. But actually just everyone being in the city or congregating, and that still matters for insurance.
It does still matter because, I think the flow of the data and the digital information you get is all incredibly helpful in measuring the risk, managing the risk, pricing the risk. But ultimately, there's a conversation. What is the solution you're trying to create? Why is it a little different to what the piece of paper is telling you? It's important. And I think that conversation's actually become More important, it feels like I've been in insurance 400 years, let's say 40. And I put this picture up on the wall of the last 250 years of history. And so insurance has mattered 3 times in 250 years. 1850 to 1870, world was at civil war with itself, 2 world wars, consequences now. Because you've got everything now. You've got financial risk, you've got systemic risk evidenced by an industrial disease called COVID. You've got war on land, you've got climate. So I think the world is in a risky space, and suddenly insurance is interesting and matters. So I think, oddly, the value I'm about to say this, aren't I? Oddly, I think the value proposition is going up.
How much are you using AI?
I think if you think of AI or the complexity of AI, I mean, it'll be significant in everything we do. But it's a digital transformation program, which means it's flipping hard and it will be expensive. So everyone thinks it will save. It won't. What it'll do is it'll create an ability to manage the flow more elegantly and manage more. Because I'm so flipping old now, I started life with no PC. All the investment in technology, it has not saved a dollar. In fact, it's cost a lot. But what it's allowed us to do is to be much better at scale. And I think AI and Gen AI and the flow of information, the management of information will do exactly the same. It's not going to save money, I don't think. And I don't think there's going to be this mass loss of jobs that everyone thinks.
John, what are you experimenting with AI? Because you can either, you can have recognition of weather patterns, which I imagine that helps, or it's actually whether claims are real or not.
So the front end, how do we identify the risk to be able to measure the risk, manage it and price it without having to ask people 72 questions? The reality is, if you can answer one question and that question is, who are you? Everything else is there. It's somewhere.
It's quite depressing.
So it is quite depressing. It's actually quite a hard question to answer, funnily enough. And that's why it'll take us time to get there. So if you can answer that question, you can find everything you possibly need to know about the risk to be able to say, yes, we can accept that risk. And yes, we'll price it on that basis.
So just to be clear, when you're saying, who are you? So you say your name, you say your age, and immediately the AI can crunch enough about you to price whether you're a good insurance risk or not.
The problem is it's not that easy a question to answer. You think it is, but it's not. So that's where the flow's got to work. And then when you get to a claim, at the end of the day, you want to find a way to pay the claim as quickly as you possibly can. So is the claim a valid claim? Do you need someone to investigate or assess the circumstances? Again, if you can use a form of tech and data to help you with that, it's going to save an awful lot of process and time and the value proposition of insurance and being able to pay a claim.
The concern is always biases, is that if you make a machine do something, that there's a certain pattern, and so you basically replicate, right, some of the biases in society when it comes to insurance.
Massively.
And they get accelerated or accentuated.
Massively. And they're hard questions. Let's take sort of auto insurance or motor insurance, and you get the regulators looking at that and saying, you've got to be careful that you don't create a bias. So the classic example was EU law saying you couldn't differentiate around people's attributes or characteristics, i.e. if you were male or female. So we know that female drivers are better than male drivers. There's enough statistical evidence. And the answer is, no, you can't use that. And so you think, whoa, hang on a minute. What you've got to do is be satisfied that you can solve for risk. You've got to ensure that society's covered. But to allow us to do that, you've got to allow some form of differentiation.
Lloyd's has always prided itself, hasn't it, on the fact you could insure anything. So are some parts of the world now becoming uninsurable, or is there anything possible at Lloyd's?
I don't think anything's insurable. I don't think it ever was, honestly. So if we do sort of weather-related stuff, I mean, we've got all the measurement tools in the world, but we don't know. You had more hurricanes make landfall in the US than they have done for decades, but they didn't really cost very much. So wind is really quite difficult to predict. Actually, water and fire isn't. So when you think of flood and fire, and everywhere in the world you look at flood and fire as being a risk, it's all insurable. It kind of needs a different form of public and private partnership. I'm desperate to call it something else because everyone hates it.
Phrase, yeah.
Everyone hates it. But when you really think about it, the one thing we've got to work out societally is the government can't bail us out every time something happens. An industrial disease comes along, it's a form of influenza vaccinate. It's not, but we've shut society down. We borrowed $12 trillion. You borrowed $12 trillion with interest rates of 4%. can't do it. So somewhere in this story, we've got to work out how the partnership works. And as insurers, if you look at the complexity of flood and fire, we can help. But it's going to need the government, where we were going earlier on, the regulator, the bank, and the insurer all in the room. How are we going to solve this problem?
But John, just on that, I mean, thinking of the example of Tenbury Wells, which is a Worcestershire town, where the people up and down the high street are saying, and the question really is about cost. It is insurable, but they can't afford the insurance. I'm just wondering what you say to people in a town like that.
So I think that's why I think everyone needs to be in the room. So, and I'm not trying to be provocative for the sake of it, but if 9 times out of 10, the banks loan the money on the basis of the asset being available. So they've got to take some responsibility for the risk that's there in reality. They can't just leave that bare. And I think, therefore, can the insurer, if there is some sort of protection offered by those that are providing finance, and the insurer can sit behind that. And then if it gets particularly fraught and complex, then we've got to leave the government right at the back in a very last resort situation. If you think of the UK, we're fluvial. We live on rivers. I mean, that's what we do. We draw maps of the Thames where we are. We're sat in London. By the way, it floods 2 miles south and half a mile north. I mean, it floods completely. So we know these things are going to happen. So we just need to take a step back and say, we know they're going to happen. So how do the various constituents, those that own the asset, those that provide insurance, government, how do these components all fit together? Because they can.
But premiums rise. I mean, even if you look at geopolitics, I was told of a big tanker carrying, I think, Ukrainian grains in the Black Sea that was still insurable at $1 million a day. I mean, that's not really insurable.
No, it's not. It was quite an interesting conversation at the time of, the ability to move. I thought it was grain. Actually, the problem was fertilizer. So, we had the UN approach us, the Secretary General approached us and said, look, the problem with solving the problem here is you insurers not being prepared to provide insurance. So I didn't know the Secretary General at the time. I wrote a nice letter back saying, I think the problem's sanctions, actually, because it's a little tricky. And he wrote back and said, we'll sort the sanctions out. We'll create the pathway. We'll make sure that Russia's on the pitch. Can you provide the insurance? And the answer is, yeah. And then we moved 30 million tonnes of grain and several million tonnes of fertilizer. So again, that to me is about the partnership. If you've got the governments involved in that story, able to say there is a form of a framework that we can permit, then the insurance genuinely can apply.
At how much?
So it's going to be more. So on average, when we were moving the grain through the Black Sea, it was probably costing half as much as it normally would have. Not twice the price or 3 times the price. But I think, don't get me wrong, I think one of the things we're not great at is selling ourselves and explaining the value proposition of insurance. Because everyone thinks the same, don't we? We all think it's not us that's going to be burgled. It'll be somebody else. But that's the principle of insurance, isn't it? The premiums of the many pay for the losses of the few. But we've kind of got to be able to sell the value proposition. It's just starting to happen. We've been selling cyber insurance policies for almost 30 years. Right. But, when you think about it, it's just now that people are thinking about cyber insurance. If you looked 2 years ago, 90% of the cyber policies were bought in the US. No one else in the world was buying them. No one else. So you say, well, we're partly responsible there because we need to explain why it's slightly different and why the value is what it is.
One of the stories that's gripped the world the last few weeks was the murder of the executive in New York. A horrible story. Also, the reaction from a lot of the on social media has been fairly shocking and very compelling to look at. How did you feel when you saw that? To your point about the image of insurance, obviously the question of health insurance in the United States is particularly
slightly different. Yeah,
it is different. But that was an event where we're seeing people change their behaviours, or executives are starting to think, but particularly about the insurance industry. How did that make you feel?
The bit that worries me is you want the smartest people to be leaders, whether that's government or business or whatever you want. And societally, we're making it really difficult because you don't want to pay them. So everyone talks about the pay and
in this country, right?
Yeah. Why are we paying them? And you want to pay them. They get regulated in a manner which is frightening, and then they are exposed. Whether that exposure is social media or whether it's terrifyingly some form of attempt on your life, and that's the bit that worries me. And we've got to work out how to get the balance right.
On climate change, some of the things you're talking about we're a fluvial nation and so on. Do you find as a company that you're wanting to get involved in policy around adaptation in a particular area to help a community head off these problems, or do you find that isn't useful?
I think it is useful, and I think we've got to have a noisy voice in it, because I think I've said this too many times.
It's about leadership as well.
Yeah, and I think you're never going to get an insurer to deny climate change. So if you look at our data, the severity and frequency of natural peril losses has doubled in the last 25 years. Doubled. And we think it's going to double in the next 10. Does that trouble our ability to provide some form of protection? It does not. I mean, it goes to a bit of a cost argument, which is why I think we've got to get everyone around the table. I think if we can then tell that story more clearly, then I think society will understand the value and be prepared to appreciate the cost with it. If you look at, say, California, 9% of the population buy earthquake insurance, 91% don't. And we all think, my God, you're on the San Andreas fault. You must buy earthquake insurance. And they've taken a step back and said, well, it's not going to happen this year. Yeah. But we've got to work out, without telling people they have to do something. You know, we all buy car insurance. Why? Because the law says you've got to buy car insurance. But that can't be the answer to everything. We've got to work out that there is a risk and that you can spread that risk differently, which is why I think we've got a bit of a job to do in this. So your adaptation question is right. So we should get in the conversation.
I always think of insurance actually as on the front line of climate change, because I think you're the ones having the very, very bread and butter conversation with a household about whether, you know, everything you've been talking about in this podcast around affordability and whether it's worth it and so on. Whereas I think banks, it will change in the years ahead, but at the moment they're still in that place where they can choose how much they invest. I think for you, these are really, really linked to your bottom line.
I think you end up with the societal problems that you end up reporting on. So I think it's 7 million homes that are not properly covered for flood in the UK.
Oh. But it's a trust problem.
Yeah,
right?
I get
because
it.
You'll go through insurance, or you'll get a new credit card or something if a friend says, oh, they're very good, it's worth it. So how do you change the conversations around it? We've
got to change the way in which the product's presented. If you think about the complex climate-related covers we've got, you end up with these odd things called parametric covers, where the trigger is predefined. So, and they've now got quite clever ones where it's a variable trigger. So in advance, you turn around and say, let's pick the Caribbean. So you've got a hurricane that will go through. We can measure what's happened, and you can categorize the wind speed or the severity, category 1 versus category 2, category 3. And you can say in advance, if it's category 1, it'll be a 25% payout. If it's category 2, it'll be 50. If it's category 3 or more, 100. And it could be variable. And I think we've got to get a bit more there on insurance products, where it's not perfect, but the customer knows at the outset what will actually happen, and then bang, it happens. And then the payment is immediate. So some of those covers, so just to give you a feel, the two biggest brokers in the world that deal with that type of cover have sold 200 covers of that ilk this year. So I think it's starting to happen, because we can't end up in the situation we did in a COVID world with business interruption insurance and people saying, have I got cover? I thought I got cover. No, you haven't. You know, we've got to create policy covers of certainty, because that's the trust point.
You mentioned these kind of big moments in history. Are we at this moment where the insurance market needs to scale up in a massive way to deal with the new level of risk that we've got all around the world, specifically about climate?
So we can do it. Honestly, there's no lack of capacity. There's no lack of money. It's the conversation we're having today. It's an awareness, and it's an ability for people to co-participate. If I look at the climate-related or weather-related risks, can we insure them? Yeah, we can. But we've got to create that awareness, and then there's got to be a determination that the risk is mitigated. You know, we'd all say the same thing. I mean, don't get me wrong, COVID was terrible, but was it worth increasing debt to GDP by 100% for almost every country? You know, if you look at the UK government, the overrun spend on the NHS was 100 billion in 2 years. That's really fraught for a government in terms of managing its finances. You can insure against it. We do that every day of the week. We provide 200 billion of cover against a North Atlantic hurricane smashing into the east coast of the US. You can insure against it. There is one big problem with insurance, which we've talked about a little bit, is there is a premium to pay. So it's not free
or cheap.
Or, you know, but I mean, most of those types of covers are like 1 in 20. which is fine.
Is the British government, or the newish government, are they on top of all these issues, do you think? Are they a good partner now to, custodians of Lloyd's as the kind of crown jewel of the city and the world centre for insurance? Are they good partners?
They have. I mean, they have been coming in. They've been very active in terms of the conversation. I probably get shot for saying this. They have their meeting of their first industrial committee next week. It's at Lloyd's. So they've asked if they could host the meeting there, which I think is I don't think it's us. I think it's a perception of risk. They are trying to address risk either through the missions or the objectives.
So that's the Chancellor, is it?
Yeah, it's the Chancellor.
With the heads of companies and industries.
Correct.
Right.
So I think whether it's the missions or the milestones they've set, and I think what we would have said to government and industry would have said is the same conversation we're having today, which is, look, just have the confidence of a two-term government, because your plan's going to have to be 8 to 10 years. It ain't going to have to be 2 weeks or a year or two. And to be fair, I think that's what they're trying to do.
There's talks about a reset with Europe. Obviously, Brexit impacted Lloyd's a lot. Could that help, or is there something else in regulation? What could the government do to support the market?
To be fair to the regulators, they've had a competitive lens placed on them. In the conversations we've been having, they've reacted constructively to that. So that's cool. I think for us, and our view is a little bit different, because 85% of our income is international ex-UK. So we are a flow tool, of which the biggest trading partner is the US. No surprise. 50% of the entire world's flow comes out of the US. So we need a strong relationship with the US. Of course, we could do with Europe being a little bit easier. And by the way, that's not just a nasty, objectionable Brit saying that. The Germans would say the same thing. So would the French. How can we work cross-border more efficiently? So I think, we'd want the open doors. We all know what's going to happen in the US. Interest rates are going to remain high for longer. You're going to see a bit more inflation go in as consumption's created. I'm not saying it's wrong. You understand why. Europe's going to go the opposite direction. Interest rates are going to be taken right down. And then you've got the whole debate around where does China go in terms of its debt play. So it's...
John, can I ask you a culture question? Because the insurance industry has cleaned up less fast than other financial industries in the City of London. Lloyd's of London has been at the centre of investigations. How do you feel about culture now? Has it cleaned itself up?
I think there are two things that matter, which I was saying earlier on. One is the conversation we're having a minute ago about flow. The other is talent. And I think we just got to get it right, because we've got to attract the best talent. So for me, the debate we started with you actually pointing out, hey, you're not great in terms of your attitude towards women, was awesome. Because actually, I didn't care whether those stories were 10 minutes old or 10 years old. Didn't matter.
And that was, to be clear, that was a Bloomberg story from a couple of years ago.
2019.
Yeah, Gavin Finch. And
2019.
And the investigations team.
So the answer was, hey, not acceptable. So we've got to be completely different in the way in which we respect diversity. I think we then try to be smart around inclusion. With our Inclusive Futures ideas around colleagues from a black or ethnic minority background, which goes literally right from the classroom to the boardroom. So again, we try to take a long-term view on that when the debate around reparation because of association with the slave trade. But to me, you kind of want to get to talent, because you just, that's entirely what we depend on.
John, thank you so much.
Thank you.
That was brilliant. Thanks for listening to this week's In the City from Bloomberg. This episode was hosted by me, Francine Lacqua, with David Merritt. It was produced by Summer Sadi and Moses Andam. Please subscribe, rate and review wherever you listen to podcasts.